Hello, this is Ryan Mallory, giving you guys an impromptu video here, and this is actually my second take at the video. My first one, I realized that I did not turn on my microphone before I did it. Probably a good reason why I should do a test run first to make sure that the audio and the visuals are all working properly, but I didn't. I just jumped in there on it, and little did I know that I was basically talking to myself the entire time. In any case, what I want to do is, though, I want to, as you can see, we're having a great day in the market today. I'm up about 3.2% in the portfolio, 3.3% now. The market's down about 2.4%, so overall, it's a great day. I'm very happy with it. Tried to get into the IWM trade. I was 93% short when I started the market or when the market opened. Still 93% short, hoping to get into IWM, but I tried to buy it on or shorted on a 31.8% retracement or 38% retracement on the Fibonacci. That never happened. Never got close to my price target. I tried to actually buy it at 62.35. I think the highest I ever got was around 62.25. So few cents short, but overall it's a good day. I'm perfectly happy with it. But what I want to go over is yesterday, and what you have up here is an intraday chart of the S&P 500, and it was a very frustrating day actually. I finished the day up 1.2%. The market was up like 0.1% or something like that. But I was really up because I had a short that just went to the pots, to my benefit. That was LYV that you saw me do a post on yesterday, where the CEO came out and said something to the tune of, "We're okay with diminishing price margins. We're not selling tickets." So midday, the stock took a 12.1% dump. I was able to get out of that position with a 12.1% return. So let's go over this chart on the S&P 500 here. As you can see, we opened the day way down. It was exciting. Everybody was enthusiastic. But it didn't stay down, and what you got here was this nice little cup and handle pattern here that I'm outlining. This being the cup, this being the handle. And I said to myself, and I said it in the trading plan, that if we start seeing some bullish tendencies in the market, which we did start seeing around 1 p.m. yesterday, that if it breaks that cup and handle pattern, I am going to hedge my position, keep my gains, and not let this market erase the profits that I already had. So that exact scenario plays itself out. Get the cup and handle pattern. I tell myself I'm going to hedge using QLD, which is a 2x ultra long ETF, which means I only have to put half the capital to work in order to hedge myself. But we get this breakout. I go long QLD, but then it starts consolidating and so forth, and I say to myself, you know what? I do not want to get caught without being, completely short like I was before if this market decides to turn back down. So instead of having my stop loss up here to get out of the position, right about here is where I would have probably have gotten out of that QLD position had the market turned back down again. I will sell my QLD position, and if the market decides to break above it, this price range right here, then I will get back into QLD or another similar ETF. Well, that happens. We get back in, and then I go long on QLD, or I think it was SSO this time, and then the market takes a dump, and I get out. I think probably around this area right here, and then thereafter the market decides to go on this rip-roaring run here after Goldman Sachs settled with the SEC. Then you had the BP fixed the oil spill, thank God, and then you had there was another financial reform passed, which on and off topic takes more of our freedoms away, but I won't get into that. But all these things that should be good for the markets, I guess. And we see a huge rally at the end of the day. We actually finished positive, but I could have, instead of being only up 1.2% on the day, I should have had about 2.4%. I should have been able to double my profit in it, essentially, but I didn't. And instead, even though I beat the market, which I'm happy about, I could have done a little bit better. But I guess it's all water under the bridge, because then, had I held SSO into the close, or towards the end of the day, I probably would have held, overnight, and would probably not have benefited from this huge initial downswing in the markets this morning, which was pretty hefty, because I usually don't like to trade much within the first 30 minutes of a session unless I'm getting stopped out of something. But we had this nice sell-off, which I'm definitely benefiting from right now, but up 3.6% now. But nonetheless, though, I would remain disciplined at all times. I felt like yesterday showed some kind of lack of discipline on my part. I should have remained hedged. I should have, kept a lot more profits than what I did. I didn't do that. So it's a good lesson learned. It goes to show that even no matter how long you've been doing these markets for, you can't always be perfect. And I'm a prime example of that, with the behavior I exhibited yesterday. So in any case, if you're short like I am, continue to enjoy the market. It's definitely a good sign that this market's heading lower in the near term, and heck, I think it's heading lower in the intermediate and long term too. But for now, enjoy the profits. Make sure you manage your positions wisely, and don't get too far ahead of yourself. All right, folks. Have a good afternoon, and I'll continue to be posting throughout the day. See ya.